Well, if you're a real estate investor in the United States, the fourth quarter of last year was booming for you. Real estate investors bought a record 18.4% of the homes sold in the United States during the fourth quarter of last year. This, according to the real estate brokerage firm Redfin. This is up from 12.6% from a year ago and is up from a revised rate of 17.4% in the third quarter of last year. Omni Casey has been a real estate investor for over 20 years. He relishes the opportunity to coach other real estate investors to maximize the value of their income and the impact of their influence on the world of real estate. He joined me this week to have a conversation about real estate trends, investments, and so much more. I'm Kevin McShann. Let's talk real estate on this Friday, and let's have this conversation. So just how does a Hawaii native end up in Northern Virginia to accelerate, extend, and elevate a real estate investing career? That's the launching off point in which I began my conversation.
I appreciate that. Yeah, I did start in
Casey.
Hawaii, and career arc's a interesting term. I guess that makes it sound like I'm done. I'm never. I don't think I'll ever be done doing what I do, but I do try to find ways to kind of shift and pivot throughout my career. About every 10 years, I do find a way to pivot. But I started in Hawaii almost 20 years ago as a real estate investor, and just got fascinated with real estate investing. Grew up in a fairly entrepreneurial family and loved business. And it turns out real estate investing is just an amazing business. And if you understand how to run the business and run the numbers of it, it can be an amazing business as well. So I shifted into the investing side, eventually got into the licensed retail brokerage side. And that's an amazing business as well. So I did that in Hawaii, and about 10, maybe 11 years, almost 12 years now, actually, I'm terrible with dates, moved out to Northern Virginia. That's where my wife's from. Her family's out this way. And so the beauty of real estate is you can make it work anywhere you want, and you can do it remotely for the most part. And so I was able to shift, move out here close to our family, great area in Loudoun County, Northern Virginia, and continue my investing and my real estate brokerage, kind of businesses. So that's what I do to this day as well.
Happy wife equals a happy life, doesn't it?
That's the formula, absolutely.
And the core principle of what you do, Omni, is also about building wealth and helping other agents achieve financial freedom. So I'm wondering why a mentorship is so important to you as well.
Yeah, that's a great question. I throughout my career, mentors have played such an important role. I believe there's three things everyone needs. You need both coaches, you need mentors, and you need mastermind groups, and they all play a different role. But the mentor side is usually a peer. It's usually a peer in the business, someone that's maybe just ahead of you, willing to kind of take you by the hand, or maybe let you, partner on a deal and see what they're doing. So both on the investing side, I benefited from mentors. And then when I got into the agent brokerage side, I had great mentors. And when I got into coaching and training and running an office, I had great mentors that did that as well. And so I think I've been fortunate, and I think my skill set was being able to find those mentors, add value to them so that they can see the benefit of taking me on and letting me learn from them. But really fast tracks your learning, no matter what you do. So whether it's on the business side, or like I said, on the financial freedom, the wealth building side, mentors will help you get to where you want to go, usually much quicker.
And tell me, I'm wondering your thoughts on the keys to building financial wealth and freedom as a real estate investor.
Yeah. So, and it's an interesting concept. It gets talked about a lot, financial freedom. So, I love earning money. I'm not, I love the game of earning money, and it's figuring out ways to create and earn money. And on the brokerage side, the hat I wear when I'm a broker, coach and trainer, I have close to 100 real estate agents that I coach and train to help them grow their business. And so that hat is helping them earn money. The reality is it's still a job, right? It's a very cool job, very rewarding job. It's a business. But if they weren't working every day, if I wasn't doing what I was doing every day, there's no active income coming in that role. And so I'm a firm believer that regardless of what you do for active income, whether you're a real estate agent, you can get active income as a real estate investor, like fixing and flipping. That side of the investment side is still active income, because the moment you stop fixing and flipping, there's no income coming in, or whether you're working in a law firm or a teacher, right? So that active income is separate from your wealth building and separate from your financial freedom. And really, I spend a lot of time talking about passive income. How can you generate passive income that comes in? Probably you're going to work hard in the beginning to get that passive income up and running, but once it's set, you don't have to really do anything with it. It just kind of comes in. And I believe passive income is worth so much more than active income. So $1 in passive income is worth probably 10 times as much as $1 of active income, and one that's tax benefits. But obviously the huge thing is you're not committing your time. So once you stack a small passive income, you have the time to go do something else and create another passive income, and hopefully a passive income for life that just keeps coming in. So I talk about passive income a lot. My favorite form of passive income is rental properties, various types of rental properties, but I do mostly multifamily, small to mid-sized multifamily rental properties, not managed by me. Because if I was managing it, that's active and that's a job. I hire people and good team members to manage and run those rental properties so that I have the passive income. So most of what I do is I help other people learn how to do what I've done as well.
And based on your experience, I'm wondering, how do you determine the factors for a good real estate investment? As a real estate investor, what factors do you look at in order to determine whether you have made a solid real estate investment?
I get that question a lot, and it's hard because there's no one answer. The reality is there's no one answer. It really depends on what your goals are as an investor, because I can buy a property and it could be amazing for me and my goals of cash flow, but it might not meet the goals of another investor that doesn't need cash flow, and they want, wealth building, they want appreciation, or they want something else, right? So there's several wealth triggers within real estate that we take advantage of. Two of them are cash flow and the rental income coming in, and your appreciation as well. There's depreciation and tax benefits. So every investor really looks for something different. And so if you're looking for cash flow, then we analyze it for cash flow. If you're looking for, I don't need cash flow, I want to in 5 years or 10 years have a 10x, equity growth on this. What sort of projects do I need to get into to try to figure out how to get as close to those goals as possible? So most of the people that come to me for help want cash flow. get to financial freedom first with cash flow. And so I help them analyze on the cash flow side. There's various rules of thumb. A very popular rule of thumb that's been around for a very long time is called the 1% rule. And what that 1% rule means is if you're buying a property, let's just say for simple math, it's $100,000. Can it rent for 1% of that every single month? Meaning, can it rent for $1,000 every single month? And if you extrapolate that to the market you're in, let's say the average sales price is $500,000, 1% would be an average rental of $5,000 a month. And obviously, it doesn't scale up in every area. So not every area is a cash flow market, but using rules of thumb like the 1% rule or the 1.5% rule or something along those lines helps you at least target your focus of what you should be looking for. And then you start to analyze your taxes, your insurance, your actual carrying costs on that specific property, because those will affect the return as well.
And on to that point, what are your pieces of advice you would give to first-time real estate investors or flippers in order to accelerate their success?
Yeah, I think three pillars, the mentors, coaches, and masterminds are important to understand and get involved in all three of those. But it's hard to say, I want to be an investor and get into this space, because once you say, I want to be an investor or invest in real estate, there are so many different aspects of it, And so you mentioned fix and flip. Fix and flip is completely different than someone that wants to do Airbnb or someone that wants to do triple net leases or someone that wants to do cash flow. So I encourage people to really find a niche, find something that and it doesn't need to be an asset class niche. I know a lot of people want to find an asset class niche, but it's actually easier to determine where are you as an investor. And I put investors in one of three categories. And this is an oversimplification. It's in my book. I kind of put that, those three categories there. The first category is really an active income investor. So you're doing your investment activities to earn an active income. And I mentioned this earlier. Fixing and flipping, that's what, it's on HGTV. Everyone loves that. It's pretty cool. And it's exciting. Got this gratification of instant gratification of seeing the results of your work. But that is active income. That's a job. It's investing, but it really is a job, because the moment you stop buying and selling homes, you don't make any money. Wholesaling might be into that same category as well. So that's the active income category. And then the second category is for financial freedom. And that is for a period of time, everything you do as an investor goes into your future self, almost like building your retirement, so that you have enough passive income to support yourself when you want to stop making active income. And that's typically, long-term rentals is probably the biggest category. Commercial triple net leases and things like that would fall into that category sometimes as well. And then the third and final category is, once you're financially free, then you can start looking at generational wealth. You can start looking at building a legacy and things like that. So that's where you're building wealth, you're building equity, and you might do different, maybe even sometimes higher risk, higher return investments, because if they don't all pan out, you want them to pan out, but not everything pans out the way you think it is. You're already set with your financial freedom because you have your passive income from phase two. So it's phase one, phase two, phase three. And that quick explanation, if an investor, even a new investor, can say, okay, which one am I in? Do I really need active income? Okay, then this is what I should learn to do. Do I really need financial freedom? Then this is what I need to learn to do. Or am I already financially free and I'm getting into this after retirement and I just want to build my wealth? Then this is a different category, because the types of investments that you do differ depending on which category you're in.
Yeah, absolutely. And preparing for this, I'm always looking at inflation and how it affects our everyday life. And certainly when you talk about real estate investment and buying homes, inflation plays a major role in that area of life and our professional sort of realm. So I'm wondering, how do you think the rising cost of inflation affects what you do on a daily basis?
It's so important to understand this, and it's a great question, and it's a more complex question than most people know. When we're recording this, inflation's north of 7%, which is insane. I remember 2 years ago, teaching a class, and it was 5%, or getting close to 5%. And so I put a class together about, what does a 5% inflation look like? And it continues to kind of go up and up and up. But when you break down even just inflation on the real estate side, depending on which sector you're in. So for example, I dive into new home builder data all the time, because if you track what new home builders are doing, you can track what's happening with the market. And in the last 6 months alone, I think a report came out where the cost of lumber for one home for a new home builder went up by like $18,000 in the last 6 months. So just the cost of their lumber package, not to mention everything else. So if you see that, okay, new home builder costs them $18,000 more than it did 6 months ago to build a home for lumber, and maybe another $10,000 because of the roof and siding and things like that. Prices have to go up for them to even break even, let alone make a profit. So that is forcing the price to go up, and it's less to do with can people afford it anymore. It's more to do with they're building it. They have to run a profitable business. Now, luckily, interest rates have been low for so long, and there's so much money in the economy that is leading to prices continuing to trend upwards because of the lack of supply that we see in the market. So I look at inflation as, as a whole, from a retirement and a financial freedom standpoint, it's an enemy to, your plans, because many people have this goal of creating a nest egg, right? And the nest egg of, if I can make sure I have a nest egg of $1 million or $2 million or $10 million, whatever it is, to support your lifestyle. And if you started that goal 5 years ago or 10 years ago, it's already irrelevant, because it was factoring in a 2% inflation at best. And so that $1 million target that you're going for, over a 10-year period of a 7-year inflation, it's probably worth actually less than half of that. So you probably need double of what you thought. And so what I really teach people to do is not look at that nest egg number. Forget about that $1 million, $2 million, $10 million target. Really, it's what is the income? And if you can get that income, passive income from a source that scales up with inflation, then you are somewhat protected or are able to hedge against inflation. So for example, one of those things are rental incomes. That does tend to scale up with inflation, not at the exact rate, but it does scale up with inflation. And your expenses don't equally scale up with inflation, especially if you're locking in a 30-year fixed mortgage on a property. That doesn't go up when inflation rises. Your taxes, your insurance definitely can go up, but that your biggest expense, your mortgage, stays the same. So if you are bringing in passive income through rental properties, it does tend to protect you better than saying, I need X amount of dollars in the bank in the future.
And when you look to mentor agents or investors who want to get into the business, or if you look higher than, what sort of qualities are important to you when you look to hire or mentor people?
It's important. I mean, I part of me wants to help everyone, and I spent a lot of my time just kind of doting my time. It's not an actual business. I don't charge for coaching or mentoring. I try to help as many people as I can, just because I feel like I've been blessed because of real estate, particularly real estate investing, and I want to be able to share that knowledge and help people benefit their families the way that I have as well. But then I realized, I spent a lot of time with some people, and they're just not ready, or they don't have the same level of motivation maybe. And so particularly, for example, when I'm hiring an agent to work, that's more of a subcontractor, independent contractor type of role. One, I need them to be hungry. I need them to want it more than I do, because I get excited for them because I know what's ahead for them, and I want it. I really, really want them to succeed as an agent or as an investor or whatever it is. And if they're kind of excited or like, yeah, let me try this out, it usually doesn't work. Because my enthusiasm for them and their future usually is not enough to carry them. So I tell them, I'm going to be here in my excitement. This is where I'm going to be. I need you to be here. And if at any point you are less excited or enthusiastic, or you want it less than I do, it's just not going to work for you. and it's not a good fit. So I try to set the bar high in terms of excitement for them and positivity, and usually set that expectation for them to have that same level of excitement, enthusiasm, and outlook on what their goals are.
And when we talk about first-time buyers or millennial buyers, more and more it's becoming more difficult for millennials to enter the market of either home buying or investing. And I'm curious to get your thoughts on why you think that is and why we've become such a competitive marketplace, specifically for millennials.
Yeah, it's tough. And I'm a millennial. I'm probably the oldest millennial. I'm right at the top end of that price point there. But I kind of been seeing this generation, holding off on buying for a while, maybe because they learned and they watched the generation, their parents before them, and go through a housing crisis, and maybe that put things off there as well. But we're seeing a influx of buyers, and a lot of them are millennials, and even Gen X's are getting into it as well. So there's just so much demand at the same time. So it wouldn't be as big of an issue if there wasn't as much demand, but there's so much demand because there's so many buyers. They're also competing with, older generations that are selling their home that need to buy as well. And they're competing with a robust investor market, right? A lot of investors out there with cash, or a lot of almost seemingly unlimited funds to compete with. So the competition is stiff. And you pair that with the lack of supply over the last 10 years, since the crash, the supply of new construction builders, increasing stock, increasing homes, has been drastically low, well under what it should have been. And because a lot of builders went out of business, or the ones that sustained, they were more cautious on their approach to add new homes. And you do that for 10 years, we are 10 years behind on amount of supply that we really need to make this work. So supply and demand issue, and it really comes down to, if you're a first-time home buyer trying to get into this market, you need, probably more than ever, someone that knows how to creatively find off-market properties for you, even if you're a buyer, not an investor, or someone to help you give yourself some sort of advantage in negotiations. Because if the seller's looking at 10 or 15 offers and you're just one of those offers, yours needs to stand out. It needs to have something unique about it, and that's typically through some sort of consultation that your agent. When I buy in a market, it's my agent. I rely on them quite a bit to help me get there.
And I'm also fascinated to ask you your perspective on the whole notion of buying versus renting, and the notion of, if you rent somewhere, you're effectively throwing money away versus investing in building equity. I'm wondering your thoughts and perspective when it comes to that debate as well.
Yeah, I wear a lot of hats. And so one hat that I wear is a real estate agent and broker. And so that hat, if I put that hat on, I'm telling you, absolutely, you should own your home instead of renting your home. Even if you have no intent to be a real estate investor, because you're not a real estate investor at that point. Sure, is it your home potentially an investment at some point? But if you need to spend $2,000 a month for living, for housing, regardless, or $3,000 or $4,000, whatever it is in your area, and you're doing it in owning a home, even if, let's just say, the market does not go up, even if the market does not go up, just you paying your mortgage pays down that principal and actually builds you up some equity. And at some point, you have it long enough, you pay it off, you have a free and clear asset, and there's a benefit there. So there's a clear benefit. If someone bought a home 2 years ago, they lucked out, because one, they thought they were at the top of the market, and it turns out it wasn't the top of the market. It went up another 25 to 30%, depending on the market that you're in. And they have a bunch of instant equity right now because of that. So it is a timing thing. But once again, if you just factor in less as the investment and more of, I need to spend money to live, and I might as well do that and own a home, then that's the aspect. Now, the investor side of me, there's a different hat. The investor side of me says housing expenses is an expense, and whether you're paying a mortgage or whether you're paying a rent, it's an equal expense, because an expense means that's money you can't save up to go actually invest. And so if someone's coming to me and saying, I want to start investing, I want to buy a property, a rental property every year for the next 5 years or next 10 years, I got to help them figure out how do they reduce their expenses. And it might be go find something very, very cheap to rent. Or maybe even better, it might be go find something that they can house hack, go buy a duplex somewhere, live in one side, and have the renter next door help pay for your mortgage. So you're reducing your expenses drastically so that you can now save that money to go invest, to go buy something that's going to get you some passive income for life.
And when we look at emerging real estate trends, I'm wondering your thoughts on what's catching your eye the most, and what has you most excited?
Yeah, emerging real estate trends. There's, on both the brokerage side, there's some new innovations happening, which is pretty cool. So from the brokerage side, we represent a lot of first-time home buyers, just buyers that are looking to buy. And although I'm personally an investor myself, I feel for the non-investors out there because they don't have the cash needed to really compete in this market. So there have been some really, really cool tech companies emerging out of this need, and we've just partnered with a tech company called Ribbon, and what they do is they allow our buyers, even if they need to get a 5% down loan, they back that loan basically like an insurance so that they can switch that offer to make it a cash offer, even if they're not buying cash, right? And so that's brand new, like literally as of the last couple weeks or so. And so it's seen these innovations to give the average home buyer at least a fighting chance to compete in this market. So that's exciting. And then on the investing side, I think one, a rising tide raises all boats, right? So everyone right now is making money in real estate investing. So no matter what you do, it's hard not to make money, which is, good and bad, because eventually once the market shifts, some people, if they weren't doing it with the right amount of reserves or the right thought in place, they might be the ones that are losing money, if the market shifts at all. But I think there are some creative strategies because it is so hard to buy right now and the prices are going up. It's forcing us to think of new ways to use a property, new ways to use that asset. And you're seeing more, the wave of the Airbnb over the last, 5+ years or so, and how that turns a normal rental property into an advanced, higher incoming asset. Or even co-living as an example. People, depending on the region, you might be able to have a co-living situation and have 3, 4, 5, 6 tenants in a property, and now you're getting 120%, 150%, of what a normal rental would be. And that's forcing the creativity in our market. And I think in the long run, the investors will benefit from that creativity, and we'll see some interesting things in the market.
Yeah, I have a few more questions for you. The first is, how do you think is the most effective way to build equity as a homeowner? And if you're looking to make a property attractive, attractive to an investor, I'm wondering the steps that you can take as a homeowner to accomplish those two goals.
Yeah, so if I'm looking to build equity as a homeowner, a property that I'm going to live in, then really it comes down to its comps, right? What are the neighborhoods selling for, and can I keep my home in the top condition? I teach a class. It's a difference between adding value or creating value. So adding value is updating your cabinets, updating your countertops from Formica to granite or to quartz or whatever it is, right? That's adding value. Clearly, if you go from base level to top tier grade quality, there's some extra value there. But creating value is completely different. Creating value is basically going beyond that scale. So, for example, in this neighborhood that I am, we're renovating a home right now in Loudoun County. The 3-bedroom, 2-bath market, like the range for a 3-bedroom, 2-bath market in that market is probably somewhere between $450 and $550. Right. And so no matter where I am, I'm somewhere in that range. And to get to that 550, I need the granite countertops. I need the upgraded everything to get there. However, if I'm able to turn it into a 4-bedroom, 3-bath and completely change it, right? And create that value, now I'm on a different pay scale. Now I'm not between 450 and 550. I'm probably between 575 and 675. And that gives me created value to shoot towards. And so even as a homeowner, you can figure out, are there ways to create value? Am I in a 3-bedroom? Can I turn this into a 4-bedroom? You might not need a 4-bedroom, but if you turn it into a 4-bedroom or add an extra bathroom, that might completely change where you are on the comp scale. And, if you're going to sell it at some point, or if you're going to refinance, that increases the amount of equity you're able to pull out of that.
And I'm wondering your thoughts also on the notion of how practical experience can help you as a real estate investor or a real estate agent. I'm wondering your thoughts on that notion of practical life experience helping you in the professional realm as well.
It's so important. It is, both as a real estate agent starting out, or as a broker starting out, or as an investor starting out. That was so relevant because until the actual experience, it's all theory, right? It's things that you're learning, it's things that you're watching people do, but you don't actually have that experience. And so, although I don't like investors doing deals where they're not making a good margin, or they're maybe not making money at all, I would rather them jump into a deal and break even just to get the experience. Now, don't try to break even, try to make some money. But if someone did a deal and didn't turn out, something came up, didn't turn out, and it turns out they broke even, I would be angry as an investor right now, because I don't do deals to try to break even. But from a new perspective, I would say that's great education. You just had a master's degree in learning how to take your investing game to the next level, and it didn't actually cost you anything. You broke even. Let's say worst case scenario, it cost you $5,000. All right, $5,000 for the education that you learned, the practical experience education that you learned, is still not that bad. Same thing on the agent brokerage side. Sometimes you are trying to just help out other agents and get involved in deals and not even get paid on them, or maybe taking a very, very small percentage of the deal to add value to other bigger agents that just need help. I encourage you, if you're a new agent, just to do that. And not try to make the most money doing that. You're trying to get that practical experience, because that experience is going to give you confidence. And your confidence in yourself is what's going to lead to your growth, because until you know that you got it and you really understand it, it's really hard for you to put it out into the world that, yes, I am the top agent, I'm the top investor, I'm the top whatever it is, because you don't believe it yet. You have to believe it, and you typically need some sort of practical experience to do that.
Yeah, and my final few questions for you today have to do with your own personal life. I know you've got some kids and you're married, so I'm wondering what sort of an example you want to set, both personally and professionally, for your kids to emulate. How important is that to you?
It's extremely important. I have a beautiful wife and I have 3 kids between the ages of 7 and 13. And
God bless your heart for that.
Thank you. And they're amazing. I run a family investment business, and that's it. It's my wife, my 3 kids, and a few virtual assistants. But the reality is, I want to keep them involved as much as possible. I want to, pass on the knowledge that I've obtained through trials and errors, right? And so hopefully they can, it's not the money, it's not the wealth, it's the knowledge that's most important. And I talked about the various phases of my life, and I'm in a phase that I think I am in a legacy building phase. I think I do want to spend most of my time, giving back. And so it's been rewarding, kind of thinking about how can we shift our business strategy, investment strategies to give back more. And that's really one of the reasons why although I wrote this book, the Cashflow Breakfast Club, about 3 years ago, I never actually published it. I wrote it because it was kind of a step-by-step manual of what I thought, what I actually did to become financially free, and what I think anyone really could do to become financially free in not that long of time through real estate investing. And then really, it's in the last year, my wife encouraged me, a few other people encouraged me to get it published. So it's actually being published this year. And it's everything that anyone can do. It's basically if someone asks me to coach them or be a mentor on the investing space, it's what I go through them for over a 5-year period, basically, to help them achieve financial freedom. So that's been rewarding. It's been a project I've been doing with my wife, and we think that's going to make a pretty big impact as well. And then we're shifting our investing focus and spending a lot more time, offering more free coaching, free training, just to help as many people as possible. My kids are involved in all of that. So when we do these free education seminars about once a month, typically one of the kids are there. They're part of it, just helping get set up, helping actually even providing input on the weekends. I take them out with me and they go see properties with me. They're seeing our renovation projects. So everything I do is around family. Although I'm business focused, I really understand that I do need to involve them into my world. So with that, we have that connection, and it's been very rewarding over the last few years doing that.
Yeah, generational wealth come in all different types of forms, isn't it?
Absolutely.
And my final question for you has to do with, if they make your life into a movie, what do you think the title of that movie would be? And what would you want the plot line to be to define your legacy?
Oh, that's a really good one. So my legacy, a movie. I mean, right now, I guess it would probably be this Cashflow Breakfast Club, because that speaks to what my mindset is right now. It's all around that, and it speaks about the free knowledge, the coaching, the mentoring, the masterminds that are so important in life, even if it's not investing, but just in life, no matter what discipline you're in. If you can find really good mentors, really good coaches, really good masterminds, you can succeed at a high level. And it's a narrative, a story on that. So it'd probably be somewhere in that Cashflow Breakfast Club. Speaking of financial freedom, turn it into a movie, probably.
Fabulous. And tell me finally, how many people want to get connected with you? What's the best way they can do that?
Yeah, Omni, the investor guy. I'm on most of the social media channels, Facebook, Instagram. OmniTheInvestorGuy.com is my website. You can sign up for pre-order of the book if it's not out yet. That's coming out soon, and try to put some helpful free video training content that I do tied there as well. So if you have any questions, I'm pretty good at responding to inquiries within a reasonable amount of time, and happy to help.
Fantastic. Well, Ari, I really enjoyed ending my week having a conversation with you about real estate investment. Your work in the space and time on my behalf is most appreciated. And I want to thank you for engaging in conversation with me, taking my questions, and for being here this afternoon or this morning. It's most appreciated.
Kevin, it was very fun. Thank you for inviting me on.